Hey everyone, if you missed my webinar last night, this is the video replay. Hope you enjoy it. All right, good evening everyone. Welcome to tonight's webinar. I am Stockscores founder Tyler Ballhorn, and I will be your host this evening. I'm going to take you through today's trading day. It was a bit of a unique one, and unique in the sense that it was better to be on the short side than the buy side today. Most days we buy stocks, but today was a good short selling day. And I will talk tonight about why that was and how you can take it, or how we could take advantage of it. It's too late now, obviously. And just try to give you a little bit of insight into my thinking and my processes and show you my tools. And there's going to be lots of good information in tonight's presentation. So there's the itinerary. I need to explain to you how I measure performance because it'll be important for some of the things that we discussed tonight. So we'll do that first. I'll then walk you through my pre-market assessment that I did before the market opened today. And I will show you the tool that I use to identify trades through the day. It's called the LYFT tool. It has some programmed algorithms and strategies, processes. I use a very automated process to identify trades, let the computer do most of the work, so I'll show you that. I will go over the stocks that were buys in the opening half an hour, the stocks that were shorts in the opening half an hour. We won't spend a lot of time going through the whole day just because the best time of the day to trade generally is in the first half an hour. There were opportunities later in the day as well, but I don't want this to be a 3-hour presentation, so we'll try to keep it to an hour. We'll talk a little bit about some of those other trades, and then I'll show you the performance for today, the performance of the buys, and there was only I think 3 or 4 that were valid today, and the rest were shorts, and so I'll show you those as well. Just while we have everyone coming into the room, I know that there's still always a few people that arrive a little bit later. I'm going to put up a poll here, and this poll is just asks a simple question about your interest. I'm always curious about what kind of trading people are interested in. I've never asked this before, so I thought I'll do this. And while that's up, I'll give you a little bit of my background in trading. This is now my 30th year, 30 year in trading. I started when I was 19, and I turned 49 this year. And I have spent mostly every day for the past 30 years analyzing markets. So I've, over the years, acquired a pretty good feel for how the market moves. And I've built some tools that are pretty cool. I'll show you some of those tonight. One of the great things about trading is that you can do it from pretty much anywhere that you can plug into the wall and get an internet connection. So I live in Canada, in Kelowna, Canada, which is a place in British Columbia. But I spent a year traveling around a little bit, spent 6 months in Hawaii and 6 months in Whistler. And those are some of the luxuries that, or the freedoms, I guess, that trading can offer. You get to work from home. My kids are often talking to me in the background while I'm trading, so that's an extra bit of freedom. I have traded from an office before as well, but I actually prefer to trade at home. Once the kids are in school, it's pretty quiet. So, all right, so I'll take down that poll, and then we will get into the presentation. So let me just close that down. Thanks for answering. I'm always a little curious about that. All right, so let's start with how performance is measured. So we're going to use something called the reward for risk ratio. And I know a lot of you are familiar with my work and know all about this, but I need to explain it a little bit for those that haven't seen one of my presentations before. And the reason I use the reward for risk ratio, it allows for a better comparison across different trades because we tend to buy smaller positions in dollar terms of lower price stocks and higher dollar positions in higher price stocks simply because lower price stocks tend to be more volatile than higher price stocks. Apple doesn't move with the same percentages that a $2 stock might. And because of that, because we want to protect our capital and that sort of thing, practice good risk management, we will take those smaller positions in those volatile stocks so that we don't risk too much of our capital. And at the end of the day, we can make every stock have the same amount of risk using some of the techniques that I'll show you. So if you risk $100 on a trade and you earn a $300 profit, then you have earned a reward for risk of 3. Now, it's important to understand that when I say $100 risked, That does not mean a $100 position. That means how much we are risking if we are wrong. And we size our positions based on our risk tolerance. So some people will trade with $100 of risk. Some people will trade with $1,000 of risk. It's up to you what you trade with. It's really a function of how much capital you have, your experience, your risk tolerance, that sort of thing. I recommend that everyone, I don't care how much money you have, should start with a low amount of risk when you're learning, because there are always going to be mistakes when people start. And why not have those mistakes cost you less? I've taught a lot of people over the last 20 years of teaching people how to trade. And that's one thing that I really try to emphasize is start small. You can scale up your risk as you get skill, but why gamble? Why risk your capital when you're learning? So our position sizes are based on the volatility of the stock, and ultimately that way every trade has the same amount of risk. So what you see on screen here is one of the buy stocks today. And again, there was only 3 stocks and then 1 ETN. This particular one had the buy signal right there on the opening bar. And it actually didn't have to be entered right away, because one of the things that you can do to increase your probability of success, although sometimes you get left behind on a really fast moving stock, but one of the things you can do is just put a buy stop in at the close of that. And so if prices move down like this one did for over a couple hours, actually, it didn't really trigger a good entry until about 11:30, 11:40. But then this stock went up nicely, and it finished the day at just above 4 RR. So that means that for $100 of risk, there was a $400 profit. Now, some of you might be saying, well, if your risk tolerance was down there, how did you let that trade ride out? We typically don't take a loss unless it goes down to -3 RR. And that's quite rare, but still that's sort of the flexibility that we try to do. There's some variance in that. Obviously, there's different rules with different strategies, but just as a general guideline, that's what I like to use. I personally don't actually use stops because I watch the market all day and I sort of make a judgment based on what I see the overall market doing. But that's kind of the general guideline. Now, there was also lots of short sells today. So here is an example of a short sell. This is AMD, Advanced Micro Devices. It gave a short sell signal, again, right at 9:32, and it went up a little bit for about 4 minutes. And so a sell stop meaning you get that order filled if price falls back down below that price of 28.16. Just a great way to enter trades when it's busy. And that's what triggered this trade. This trade we specifically discussed, as did the last one, specifically was discussed in my active live webinar that I run during the trading day. And in this case, it fell nicely through the day. And of course, with a short sell, you make money by stocks going down. The stock was super easy to short, always lots of inventory on AMD, easy to short sell it. It finished the day at 4 RR, which again means for $100 of risk, there was $400 of profit. For $1,000 of risk, $4,000 of profit. We'll revisit some of these trades when we go through our performance later in the presentation. So that's how reward for risk works. Now, the next thing I want to talk about is my pre-market assessment. Before every trading day, I analyze the market. I go through Twitter. I read some different emails that I get, look at CNBC's website, look at Bloomberg's website, just trying to get a sense of where the market's going to go. The most important thing that I do is look at where the S&P 500 is in the pre-market, because I want to understand whether it's more likely to be an up day or a down day today. So today started with a gap down, and it was breaking a short-term upward trend line of support. And given that we have been up for the last 8 days, my call, which I'll show you in a moment, I actually recorded a video of me doing that segment this morning, and I'll show you a little 10 or 20 second blip of that. My call this morning was to go short, provided, because the market was gapping down, I wanted to be a little bit cautious. So I said, providing there is that second confirming entry signal that I just showed you on AMD. Now, I am recording tonight's webinar, so you will be able to watch it as a video later. I'll go through some things probably more quickly than some may like, but trust that you will be able to go back and watch the video later to get a sense of what I was talking about and slow it down a little bit. All right, so my focus today on the short side was to short stocks if they made an entry signal, and I'm going to show you how that works in a moment, and then looking for that second confirming entry which was a move up and then back down through the action candle close. I also felt like you could buy some stocks, but they had to be what we call alpha stocks. Alpha stocks are those trading on their own story, not very correlated to the overall market. Because I felt like the market was going to go lower today, I didn't really want to buy stocks that had a strong correlation to the overall market. And so we call those alpha stocks, and they have some characteristics. They tend to trade abnormal volume, they tend to break from low volatility, tend to be lower price stocks as well. And so that was my second focus area, was to look for stocks that were alpha. And there was only about 3 of them, plus the VXXB, which is an inverse, well, it's not an inverse ETF, it's an ETN that tends to go up when the market goes down. So that was the 4th purchase today, but it was really more of a call for the market to go lower. All right, so I'm going to actually show you a video of my morning call this morning. Because I talked for about 10 minutes, I just took a little 10-second blip out here. So I'm going to do that. Hopefully this voice will get picked up with a microphone. Here we go.
That means it would be another day of cautious buying at the open. I would not buy any old stock that's up a lot lately. You want stocks making fresh breaks from low volatility. I also think it's worth considering shorts, but here's the catch. You don't want to short the open. You want to short the second signal. So if they gap down on the open, they move up for a little while and then move down through our action candle close. That to me is a safer way to trade it.
All right, so that was my comment from this morning. Some of those terms really only make sense to people that have taken my courses. Things like rolling over through the action candle close. Those are things that are not really that complicated, but they're taught in my course material. And for now, just trust that we were looking for a second signal. All right, so the next thing I want to talk about is the Active Live tool. So I built an automated process with some help from great programmers that can take what I can describe mathematically and put it into code. My approach to the market is to be entirely algorithmic. I don't trade on gut feel or tips or anything like that. I trade based on strategies that I've tested over thousands of trades. And so I've automated those processes. I've built algorithmic strategies so that we find every single valid entry signal, because it's all computerized. I don't have to trust that I will catch everyone like I used to. I don't have to do the work to find them because the processes are automated. I'm going to show you that process again for about 20 or 30 seconds in just a minute. So the process runs every 2 minutes, and it finds what we call Stockscores action candles. When I upload this video to YouTube, tomorrow perhaps, I will put a link in the description to my action candle video so that you can go watch that video if you want to know what an action candle is and why it's so effective. So the best opportunities are established by my pre-market trading plan. So I went through that pre-market process. I said, okay, I'm going to be shorting stocks and I'm going to be buying a select few stocks. And then that's my approach for the market until that analysis has been proven incorrect. And I'm not right every day. Some days I have to change my stance. And then oftentimes we get a signal to do more trades later in the day when there is a trend reversal. And we actually had one of those today as well. In this Active Live, which is a webinar that my active trader members can participate in, I provide some commentary, that pre-market commentary, and then for the first at least 30 minutes, sometimes the opening hour, depending on the day, I just try to highlight the stocks that I see, the stocks that I'm buying, the stocks that I'm shorting, the ones that I think have the best potential. I don't catch them all. The screen will catch them all, but I find that people like the fact that I can talk through the day, especially when maybe the trades aren't working right off the get-go, just to sort of give my insight from my experience about whether we should stick with those trades that we have taken. And today was a good example of that, where, you know, the shorts were doing okay, but through the middle of the morning, it kind of looked like maybe it wasn't going to be that okay. But we never really had a signal that negated my desire to go short at the open. And like I said, there was a moment in the day when it was a little bit questionable, but it ended up working out well. As many of you know, the market moved pretty significantly lower today, and those shorts did reasonably well. Now, most entry signals come in the opening 30 minutes. I'll put another link in the description on my my recent video, Day Trading the Opening Half an Hour. So again, if you're watching this as the video on YouTube, just check in the description there. I will put a link to that video as well. All right. So this is my active live screen, and I'm going to start a little video that'll show it blinking and doing things. For right now, it's paused. But let me just describe what's going on here. So down in this part of the screen, bottom left, is my S&P 13-minute chart. And you can see that we had that upward trend line broken on the open this morning, and that was why I wanted to go short, because that was a fairly important breakdown to start the day. This screen in the middle is all of my buy candidates. You can see that the list is fairly short. Now this particular video was captured at 9:33. You can see the time down in the bottom right-hand corner. That's 9:33 Eastern time, which for me is 6:33 in the morning because I'm in the Pacific time zone. And then the screen on the right is my short sell screen. And I'm going to start the video in just a moment. You will see how it's updating. Lots of blinking going on as trades are updating, and it will find every stock making an action candle fitting the rules of my strategy, and it's all automated. I don't have to do the work. What that means is that I can then focus in on looking at the charts, trying to find the best candidates, and ultimately just getting the orders filled. That's my primary goal, is to get these orders filled. If I'm spending a lot of time searching for opportunities, I might be 4 or 6 minutes late on a trade. And so one of the things that gives me an edge in the market is that I can be faster than anyone because I rely on the computer to do a lot of the work. All right, so I'll start this video now, and again, it's going to talk a little bit, and you'll see it blinking. You see bottom right-hand corner, there's some screen blinking there. We'll just wait for my comments.
So all of these shorts are valid, but as a risk mitigation, not a bad idea to wait for it to pull up, and then you go back down through the action candle close if we get that second wave of selling. Selling is pretty strong so far this morning, not holding any support. We do have support at 287. That's our next level of support on this buy.
All right, so that was just a little excerpt, and that's 10 or 15 seconds of what I was saying for roughly the opening 30 or 40 minutes. Interesting, I said that the market had support at 287. I invite you after this presentation to go look at what happened today on the S&P. It actually went down exactly to that green line that I had drawn before the market opened. And it bounced off of that, and it actually spent the following couple of hours staying above that 287 level. It then came back down in the afternoon, bounced off of it again, and then finally broke down through it. And that's really where some of these shorts gathered momentum to the downside. So my plan that I outlined in the morning was really ultimately played out perfectly. It's one of those days when I got the analysis really correct, and the shorts were the right place to be. All right, so let's move along. So on the stocks to buy list, there were 3 stocks. And as I said, there was also an ETN on the VIX, which is something that goes up when the market goes down. But let's just talk about the alpha stocks. They were ATAI, Geron, G-E-R-N, and AMRS. And so those were symbols that came up on that screen. In fact, you can see some of them here. They didn't all, Geron came later, but there you can see ATAI. And there you can see AMRS. And, out of the 12 stocks at that moment that had triggered, only those 2 were alpha. Only those 2 fit my requirements for alpha stocks. On the chart of Geron, this is one that was doing really well until about midday when it fell apart. And in this case, just to go through the analysis here, it triggered its action candle right there. I think it was at 9:38 in the morning. And then again, it pulled back. So you can put a buy stop in at $1.93. You had a half an hour to get this order entered because it didn't run away right away. And so if you had a buy stop in at 193 and it triggered right there, and then the stock went up fairly good, it hit max of 4 RR. The upward trend line was broken right here. Normally I would not sell something like that. I would stick with it, but ultimately that was the right time to sell. That break of the upward trend line, I know many of the people in my webinar this morning said that they sold there. It was a falling top. There was a lot of good reasons to sell. It just, I tend to be a little more patient than maybe a lot of people are. And then it really fell off into the close. Now, this was the one trade that ended up being a loser today off of that list, although during the day it was a good winner. And you can see the path that it took through the day. For those of you that are wondering, this is a 2-minute chart, so each one of these bars represents 2 minutes of trading. That's what I like to use for day trading. I find 1 minute gets too many false signals, 5 minutes is too short. Now on the short side, what I was looking for, as I mentioned in that in those little videos that you saw, I was looking for stocks making bearish action candles. So these are stocks making abnormal price moves to the downside with abnormal volume on the 2-minute interval. There's a few other rules that are part of the strategy. And what I wanted today, which I don't normally require, but what I wanted today is a stock, if it did that, to go down with the action candle, then come back up, and then I would put a signal or an order to fill the short if it came back down through that. And so when I showed you that chart of AMD a few moments ago, that's exactly what it did. It went up for about 4 or 6 minutes and then rolled back down. So you had 6 minutes to get that order filled, and then it ultimately spiraled lower through the day. So some of the stocks, there was actually 22 valid entries, probably more than most people could handle. There was 22 valid entries today on the short side in the opening 30 minutes. And through the rest of the day, there was even more. It was a very busy day on the short side. Some of them from today, Aurora Cannabis, ACB, LYFT, the rideshare company that recently went public, SAP, AMD, and again, there was 18 others just in the opening 30 minutes. So we'll look at one of those. This is ACB. And just to walk you through the thinking, there was the action candle. It's that little gray dot there. And you can see that after the action candle closed, it went up for almost half an hour. It stayed above the action candle close for about 25 minutes or so. And then right there, it fell back down below the action candle close and proceeded to make a pretty good drop, getting below 5RR. Now, one of the things I will do is if the stock has a profit of 5RR or greater, I will take the money and run if I move back above the moving average. And so that happened right there at 3RR. Didn't make a whole lot of difference because the stock ended up closing at about 2.5RR. So there was about a half a risk reward element of extra profit by applying that rule. But some days it's actually more effective than that. So some other stocks that made action candles that did not meet my other criteria today. So these are stocks that had the action candle on the open, but they didn't move back up and then roll over and move down again. And these were some big winners. So that extra rule that I applied today, which I don't normally use, but I used today because the market was gapping down fairly significantly. But Hexo plus 6.6 RR, HOLI plus 16 RR. But then there was also some losers. AJRD was the worst loser among that group of sort of trades that didn't quite meet the rules, and it had a minus 4.7. And you can go look at those charts later, but these stocks all triggered alerts from that opening signal. Let's just see if we go back to this screen. I can't remember when Hexo and Holly triggered. It must have been a little later in the morning. Yeah, they're not showing up there on that screen. All right, so let's continue along and talk performance now. So what I can do is I can track the reward for risk of every trade signaled by my tools in real time. So when I show you that list on the active live screen, that's all automated. And at the end of the day, I run a little computer process that pulls all of those trades out and grabs the reward for risk for each stock at each 2-minute interval so that we can accumulate them through the day to see a line of total RR for all the valid trades. This will make a little bit more sense in a moment. But that cumulative reward for risk line is a great chart to look at because it shows how performance progressed through the day. So let's do that for the long side. So again, there was only 4 longs. 3 of them were alpha stocks. 1 was VXXB. And this was their cumulative move together as a group. And so together as a group, they maxed out at 6RR. And then right at the end of the day, in the last half an hour, they actually fell off and closed at around 3. So not a great day for the longs. Oftentimes, I will exit my longs early in that last half an hour if I see a signal to do so. And you can see that there was a bit of a breakdown right there. So you probably could get out of those positions around 4RR. But remember that 4RR is over 4 trades. So the average reward for risk per trade was 1. And that's actually pretty good. It's not awesome, but it's a decent average. If you can imagine, if you do 5 trades a day with $100 of risk per trade and you earn 5, you've made $500 for the day. And it wouldn't be too capital intensive in that way. Let's take a look at the short sell performance. And here is how the shorts move. Now there was 22 stocks here, so we had more total RR, but we also had some volatility. We had that drop in the morning when the market really sold off to start the day, and we maxed out at about 20. Then we drifted lower as I said, through the middle of the day, the market was kind of moving up, which meant that shorts were moving down, or their profit was moving down. And then we rallied back as the market sold off into the end of the day and basically finished at the highs of the day in terms of RR. So 22 trades, it finished the day at about 21 RR, so just under 1 RR average per trade. Now I'll show you the actual tool that I use to do this. I have this big massive spreadsheet, and it shows every valid trade. So here you can see for the shorts today, let me use my little writing tool here. For the shorts today, we had total of plus 43 on trades found between 9:30 and 10. Now you might be wondering, Tyler, how come it says 43 there when you showed on that last chart it was only about plus 20? And the reason is because that was every single short that triggered. It wasn't just the ones that did that, move up after the action candle and then roll over. So that's without that extra rule. And so it ended up being a nice average of about 1.06 per trade. Now on Friday, it was a long day, a day when the longs fared better, and we had a total RR on the longs of 41.6, which was an average of 1.5 RR, or to put it another way, for every $100 of risk, $154 of profit. Now, one of the cool things I can do with this tool is I can change the times. So I know from the way the market traded today that we had a pretty good sell-off into the close. So I'm curious then, how did the short sells do in the afternoon? Well, I can go into here and I can change the time. So I could say, let's look at all the shorts that triggered between 12 o'clock and 2 o'clock. So we'll go 12 o'clock till 2 o'clock, whoops, which is 1400. And I'll just take a second to calculate. And it found that there were 55 valid trades. They had a total RR of 84.8 and an average RR of 1.54. So it's a great little tool. I'll just show you here. I've got thousands of trades in this spreadsheet from every day. So here's all of today's data on the long side. Here's all of today's data from the short side. And you can see in this spreadsheet, there's 41,954 lines of data. On the long side, there's even more. I think we're over, 62,000 different trades. This goes back to February of last year that I've been building this database. Now, why do I do that? Because I can then vary my rules, test my rules to find out what works best. Again, as I started off saying tonight, I don't trade on gut feel, I trade on math. I trade on things that work well over time. And I want to put probability on my side. I don't know if my next trade is going to be profitable, but I know if I have rules that work over a large number of trades, then my next 100 trades should be profitable because I've got a strategy that has a positive expected value. And that's how I approach the market. So how can I help you be a profitable trader? We've got a number of online education resources on the Stockscores.com website. Anyone who is an active trader or investor member of Stockscores gets access to the Stockscores Education Center. So I will log in here and just quickly show you that. So I log in and then I go into the Education Center right there. And we've got free content, so anyone can read or watch the free videos. But we also have very specific strategy videos. So the strategy I was applying today is called the Stockscores Day Trader Strategy. And there's a video there that explains how that strategy works. You can see there's Stockscores Action Candle. There's a number of rules for that strategy. There's also a written document that explains the strategy. There's videos on how to use TradeStation, which is the software I use. Lots of resources to get you up to speed, even though if you're in active live, I do really all the work for you. I think it's important to understand where the strategy comes from and make sure that you're on top of it. All right. Now, for the first time in 5 years, I'm actually going to teach a live class again. I used to teach a couple live classes a year for probably 15 years. And I kind of retired from that, but since this is my 30th year of trading, I thought I would do a little mini tour. And I will be teaching a live class, one at the University of Calgary on May 4th and one at Simon Fraser University on May 11th. It's an 8-hour class, lunch is included. We go from 8:30 till 4:30. And I will walk you through how I do this stuff, both for short-term trading, day trading, swing trading, but also longer-term position trading as well. So that's something that's coming up, and I'll put another poll up shortly, and it will show you just a way to get on my email list if you have an interest in those, or if you just want to do it as an online course, because it is all available online as well. But I do think that there's some added value for those that are in Calgary and Vancouver, or who can make it to those cities to attend one of those live classes. People always tell me that they get a lot out of those live classes. So some of the tools that I offer, we have the Stockscores market scan tool, which is more geared toward position trading. So this allows me to scan the market for specific strategies. So if I wanted to find stocks on the Canadian market that are worth considering, I can run a scan, and it found 5 candidates. I can then view their charts. We did this at the last webinar, and I've got some more webinars coming up where we'll do this kind of thing as well. And then I can assess the chart and just determine whether it's any good. For example, this Bonterra Energy, I'd give it a 6 out of 10. It's breaking from a good pattern. Doesn't have a lot of volume support yet, but that's a nice tool for the investor. I also use something called TradeStation, which is this platform, and it allows me to look for stocks triggering action candles in real time and chart things. I've got indicators that are built for TradeStation. Anyone who takes my Active Traders course would get access to that. Anyone who takes my Active Trader course is also qualified for the Active Live service, where a relatively small group of people follow my trading screen. The same screen that I use to identify opportunities, you can watch as well every day for the month. It's a subscription service, but it's only open to people that have taken the Active Trader course and are Active Trader members of Stockscores. And I think finally the thing that I offer, which I think is super important for people learning how to trade, is support. You know, trading is a kind of a solo game, and it's nice to have someone who can answer your questions. I find that everyone has the same problems when they're learning. I've made all those problems or all those mistakes myself, and I can really help people learn, speed up the learning process, get up to speed on how to trade effectively. So that support is available by email. When you're on my Active Live service, you can just pose questions to me through the day, and I answer them there. I tend to do most of the answering in the first half an hour and the last half an hour because things kind of get slower in the middle of the day, and a lot of people leave their positions open, go do other things, and then come back for the closing commentary that I do at the end of the day. But that support is I think, perhaps the most critical thing. And one of the benefits that I think learning from me is that I don't teach a lot of people, and so I have the time to personally support my students, whereas, you know, someone who's teaching thousands of people, they just can't provide that level of support. I only teach about 100 people a year. So the Education Center, as I showed, it's that online education resource. We have written lessons, we have videos. For the theory part of the course material, there are tests and assignments, and I can always update that. So, you know, if you took my course 3 years ago and I do a new video, you get access to that new information. It never goes away. There's no time limit. As long as, you know, the internet's around, I guess, as long as I'm still spinning my wheels, that material is out there. So to learn my approach, there's different options. The Stockscores Investor course is for those who don't want to be day traders or swing traders, who want to be longer term traders, something we call position traders. And so it teaches my theory and strategies for that style of trading, position trading. The Active Trader course is for those who want to day trade and swing trade. Swing trading is where you hold positions for a couple of days to perhaps a couple of weeks. We use a different time frame of the chart. We use a 13-minute or a 30-minute, sometimes a daily chart, depending on the strategy. I teach, you know, a few different strategies for swing trading. And then, as I said, I am going to do that Focus Live class in May. So anyone that's ever taken one of my courses is eligible to attend Focus Live. If you decide to take the course tomorrow as a home study or as the online version, you can also upgrade to Focus Live so you can come to that class in May. And if you think you want to come to that live class in May and you've never taken the course material yet, I recommend that you register for the online course sooner than later so that you can go through the material, because the Focus Live class is going to be more in depth. It's going to walk you step by step through the processes for 5 different trader scenarios. The day trader, full-time day trader, the part-time day trader, the swing trader, the position trader, and the investor. And so I will walk you through how do you find opportunities step by step by step, how do you execute on those trades, how do you evaluate those trades in the market, just the little details that I think are more easily taught in a live classroom. I will record those live classes, and so if you can't come to Vancouver or Calgary, you can subscribe to the recording of that class as well. So some upcoming events, I just want to show you those. If you go back to the Stockscores website, go to Trader Training, upcoming events, and you can see, here's the Active Live subscription, but see how it says Active Trader there? That means that only Active Trader members of Stockscores can register for that. If you go down, there's lots of free events. So the day trade review is tonight. I'm doing another presentation next week in Calgary live. So this will be a live presentation. It's not the live class. It's just a live, free, hour-and-a-half long presentation. So I encourage everyone in the Calgary area to come out to that. It's at the Sheraton Cavalier. You do have to register. And I'm doing one of those in Vancouver as well. Here you can see the Vancouver one right here at UBC Robson Square, which is downtown Vancouver. That's on Tuesday, April 23rd. Now to register for any of these, I'm going to show you a little kind of a goofy thing about this. If I click on register online, it'll take you to this sheet, How I Trade the Stock Market Calgary, and you put in your name and you put in your email address. And then when you hit register, it's going to loop you right back to the Stockscores website, and it's going to feel like nothing happened, but you are registered. It's just kind of a goofy thing with the way that registration works for that live class. If you want to register for any of the other webinars, you've already all done that already, so you'll know the process for that. But there's a number of them, and I encourage you to take a look at the ones that are most of interest to you. Also, I have a YouTube channel on the Stockscores YouTube channel. I put up at least one video every week, sometimes 2 or 3 videos a week. Tonight's webinar will be up on the Stockscores YouTube channel. And something I encourage you to do is subscribe to the channel, but also click on the little bell icon, which will give you notifications for when I upload a new video. That way you don't have to keep checking back. You will actually get an email from YouTube, not from me, but from YouTube, when a new video is uploaded. So it's just a nice way to stay on top of the new content. It's free content. I think it's pretty insightful and valuable, and it's free. Why not use it? What is not free is my courses. I charge these in Canadian dollars. I think for the education that you get, for how much it will speed up your learning and how much it will help you avoid the pain of losing in those early days when you're learning, the cost is super reasonable. The investor course is $24.95. The active trader course is $34.95. And just an important point, the active trader course includes the investor course. So you don't have to do both. If you want to do the active trader course, you also get all of the material in the investor course. And you can upgrade from investor to active trader. It's $1,250 to do that. If, say, you do the investor course today and then 6 months from now you want to upgrade to the active trader course, it's $1,250. Now, if you are an active trader member, or if you become one in the next couple of weeks, you can also sign up for the Focus Live class. Again, this is going to be much more in-depth, more personal, more into the details. That is a $495 upgrade for the live class. If you only want to do the recorded version, it is $395. And you can sign up for all of those things in the upcoming events page of Stockscores. So if we go down here, there you can see the Stockscores Strategy Focus Live for Calgary. Again, it's only open to investor and active trader members. You can become an investor or active trader member tomorrow and then sign up for this, but you have to be signed up for it first. It's all automated, and then you can sign up for that. Here's the details of what I'm going to cover in the class. It's all outlined there. I think there's a little video in here as well somewhere. Yeah, you can click here to watch a short video which will explain that class as well. Space is limited for that class. The classroom's not that big, so if you want to do that, once the class is full, it's full. All right, to learn more or to purchase the class, you just go to the stockscores.com website. Again, I'll show you where to do this. Go to Trader Training, learn how to trade. This is a page that has some videos on my different course options. So the active trader, the investor, everything that's covered in that course, as well as the video that outlines a little bit more how that works. I'm going to launch another poll. I said that if you would like to have a follow-up email, just answer this poll, and then I don't like to bug people, so if you don't answer this, then I'm not going to bug you. So if you would like to get a follow-up email, it's not going to come tomorrow, it'll come in the next week or two, but it'll just go a little bit more detail into the different courses, a little more of an explanation there. Again, you can sign up tomorrow if you like and start your learning, get ready for the live class, but if you want to take in some more of my webinars, you're welcome to do that as well. I don't do pushy sales. I don't bug people with 20 spam emails. I find that annoying, so I imagine you do as well. But I will send you a couple of emails if you ask me to do so with this poll. All right, so with that, how are we doing on time? I feel like I've gone through this pretty fast. Yeah, this one's moving along pretty quick. So there's my contact information. You can email me with any questions you have, tylerb@stockscores.com. And my Twitter is @Stockscores. I'm going to show you something cool in a moment, so don't go yet. I want to show you something, just those RR curves for the whole day. And there's my YouTube channel, stockscores.com on YouTube. All right, so I said I was going to show, since we've got some time, let me just go back into Microsoft Excel. These are the RR curves for long and short for the entire day, broken up into times. And so if I could get this thing, there we go. So if you look down to the bottom here, it shows short from 9:30 till 10. So that's the RR curve for all valid short trades and how they progress through the day. So this right here was 12:30. That was about the low point of the day in terms of total profit. It was at about 20 RR, a little under 20. And then it finished the day at just under 50. And again, that was for every valid short sell trade. Now I could also show you all the valid longs. If I go here, and this was all the valid longs. Remember, I said I was particularly selective about the longs that I thought were worth taking, but you can see that, oh, that's not the right one, actually. This is the right one. You can see that they went up nicely when the market was moving up through the middle of the day after the gap down, but then they really fell off into the close because it, it was a short sell day and the sellers were in control. So I can look at different segments. So from 12 o'clock until 3 o'clock, this was the performance of all the valid shorts. And you can see that there were some really nice moves there on the short side as the market fell off. And so if we jump back into TradeStation and I blow this chart up here, this is a chart of the S&P 500 as it moved through the day. And I'll zoom in on this so you can see it a little better. So this is how the market moved. We had the gap down on the open. We moved lower, so the shorts did well there. And then we had this little bounce back rally off of that support zone at 287. Remember I said the market bounced almost exactly off of the line that I drew before the market even opened? That's exactly what happened. And look what happened. It also came down later in the day and bounced off of it again for a little bit and then ultimately broke down through it. But this is where these shorts really did well in the afternoon when this upward trend line was broken. So that was another cue to go short the different stocks that triggered trades later in the day, and the profitability curve is shown there. So this is the kind of analysis that I do that I really don't think most people do. It's pretty in-depth stuff. Again, all computer driven. I'm not hand-picking things out that suit my webinar tonight. This is every valid trade. It takes about 20 minutes for me to grab all this data and compile it and put it into this spreadsheet. So those are some of the things that I show to my my webinar group every day, just to walk through how the previous day went, because I think it's a very good learning experience as well. So I will, oh shoot, I've been talking and I had the poll up, sorry. That was dumb. You guys are all telling me this and I didn't realize it. I'll show you what I was trying to show you. There is the RR curve for the shorts from 12 till 3, so you can see the line, how it went up nicely. And I'll show you the opening shorts. There's that line there. And again, the times are here. There's 12:30. That was about the low of the day. So the market went down, which meant the shorts went up. And then for a period there, the market went up, which meant the short performance went down. And then we really did nicely into the close. So these are some of the tools that I utilize. You can see how the longs moved through the day. They did actually okay as the market moved up from the open. The market gapped down, but after the gap down, some of those stocks were moving up because they were in their own right strong, but then when the market rolled over and fell down into the close, those longs really suffered. And that's, again, why I do that analysis pre-market to figure out what the right approach for the day is. Do we want to go long? Do we want to go short? And do we want to switch during the day? And we do sometimes when there is a trend reversal. So I apologize for having that poll up while I was going through that the first time, but hopefully you got it the second time. So I'll just take a look at questions, and then I will call it a night and get the video compiled so that you can watch the video tomorrow. So you all were telling me, hey, Bozo, you left your screen up. If we attend the live course in Calgary, can we access the recorded online course as well? Yes, you can. Everyone that attends the live class also gets access to the video. Capacity of the class, gosh, I don't know off the top of my head. It's either 40 or 50. I'll have to check. And I think we've got about 12 signed up in Calgary so far and maybe 8 in Vancouver. So there's time still, but it is, starting to fill up a little bit. If you have any other questions, most of the comments I'm reading through here are that my poll is still up, so it's a little hard to find the questions. How long will access be granted for the recorded live sessions if we purchase that option? There's no time limit. Classes I recorded 5 years ago are still on YouTube. They're not on the public area of YouTube, so you can't you can't find them unless I give you the link, because they're unlisted videos. So you have to have taken the class or subscribed to the video in order for you to get access. But if you've bought access, you get access to it for, I don't want to say forever, because 20 years from now, who knows what's going to happen, but there's no limit that I have in mind. Do you use abnormal option action or volume as a filter to pick stocks that will move? I do not. I use the stock market itself. I personally don't trade options, but you can, and many of my students, instead of buying Apple, they'll buy the options. Not something I do, but I think if you have less capital, that's a good way to do it. It also gives you a little extra risk management because you can only lose what you put into the option. But it does tend to be on a percentage basis more volatile too. So there's sort of a double-edged sword with the risk reward on options. Another question, from your experience, is there still room for the market to go up? Yep, I think so. One thing that I think has driven this market more than anything else is that there is an abundance of money in the world, and that money has to go somewhere. And I've said this many times over the last 5-10 years. With all that capital in the world, it has to land somewhere, and there will be volatility along the way. I don't doubt that, but I don't have a great fear that the market's going to go into a long downward trend. And when it does, the market will tell us. It'll break support. It will go into downward trend lines. But right now, the market's in an upward trend. Now, I do think short term, we are going to rally probably up to the highs of the year, or I guess it was last year, the highs, and get stuck there because we've rallied so significantly off the lows from December 24th. And so I think that there is some limited upside short term before we get stuck. I talked about that in this week's Market Minutes video. So go to the Stockscores YouTube channel and you can watch that video, because it's some important analysis for the fact that I think the market may stall its upward trend right now. But yeah, take a look at that. Another question, is your active live session scheduled for all days of the week? Yep, every trading day of the month. Every once in a while, I'll have a travel day. It doesn't happen very often, but sometimes, on a Thursday, I'll say I'm only going to start the webinar, but I won't actually be talking in the afternoon. It'll still run. I can actually start it remotely, but I may not talk that day. But like I said, that's a rare event, and that's just because I'm on an airplane. For the most part, I'm there every day. It runs every day, and it's pretty reliable. I was on a cruise ship this past Christmas in Australia and New Zealand, and I was able to start it. I had a little bit of problems because it's the middle of the night that I have to start it, but for the most part, even those 3 weeks that I was away, I was still able to start it and make it run, and I had some commentary as well. Another question, how do you get the RR lines to show on your charts for an individual stock? That's all automated, so I can do that with some tools that I've built in TradeStation. Just going back to your question, Bob, about the fact that we're in a 10-year cycle and do I receive recession warning? I mean, there's lots of fear-mongering in the market. I don't care about what anybody says. I only care about what the market tells me to do. Right now, the market's in an upward trend, and it's been that way for a long time. So until the upward trend is broken, I have to remain a bull. And the moment that that changes, I will change my view. Another question, after paying the fees you showed, are there ongoing annual fees? Yes. To use the market scan tool, once you're a member of Stockscores, you get it free for 6 months. After 6 months, it's $300 per year. You don't have to use the market scan. If you're going to be a day trader, you may not want to use the market scan. It's more a tool for swing and position trading. But the tool is $300 a year. And if you want to use Active Live, which is that service where you're watching my trading screen, you get 1 month free with the course, with the Active Trader course, and then it's $195 to continue that. Can you explain why you called for a short day on open? I explained that at the start of the webinar, so it'll be covered in the video. I'll give you just a quick version of what I said, and that is the market gapped down through a short-term upward trend line this morning. And so that break of the upward trend had me think that it was going to be a down day today. With that said, I did think it was going to move up before it went down, which is why I indicated I wanted to wait for stocks that moved up and then went back down through their support zone. What is RR? Again, that's something that I covered at the top of the presentation. RR stands for reward for risk, and it's just how I measure performance. So take a look at the video tomorrow when it's up. I will send out a link to all of you, and you'll be able to just check that section out. Now, what percent do you place your stops? I don't place stops based on percents. I base them on volatility of the stock. So every stock has a different RR lines. And that's all things that I teach in the course material. It takes a little bit of time to go through that. But I don't use percentages. It doesn't make any sense to use percentages because, Microsoft, a big move in Microsoft could be 2%. A big move in AMRS, which was one of the hot stocks today, could be 10%. And so you can't use the same percentage across different volatilities of stock. So we use the action candle height to determine where those RR lines are drawn. How can you follow 22 trades a day and exit them in time? I've got great tools. On my trading platform, I have a tool which allows me to close all my positions with one click. And so what I typically do is, if I'm holding them until the end of the day, which is what I usually do, it's just one click. It's a couple clicks. I go close all positions, 100%, execute, and then I have to confirm it with a second button, but it takes like 3 or 4 seconds, and I can exit every trade. How do I follow them? I've got screens built where I can watch all of my trades and see what their RRs are. And what I tend to do is I sort my positions by their gain or loss, and I focus on the ones at the top and the bottom of the list. So if they're at the bottom of the list, that means they're the losers. And I want to check those to see if they're maybe breaking some support zones or hitting my stop loss points. As I said, I don't use stops. I actually watch them. And by watching the ones at the bottom of the list, I'm looking at the worst performers, and I'll dump the ones that aren't working. And by the same token, if I've got a real big winner, let's say it's up 10 RR, I'm going to protect my profits more. So by ranking my list by profitability, I will be able to monitor that stock a little more closely. And if it starts to pull back and maybe move through the trend line, I'll just get out of it early. I'm not so worried about the ones in the middle because they're generally doing okay, and I'll stick with them. Another question. On CMX on the 2-minute, after a pullback, can you buy or do you have to wait for the close above action candle? Well, you can do whatever you want. I tend to like to see that second confirming signal. So I'll just jump into TradeStation here and show this chart just so it makes a little more sense. So CMRX, it's not showing the entry candle here. It shows it on the 13. Not sure why. But anyway, if it pulls back, I like to see it confirm by moving back up through the action candle close, because the pullback may not end. It may pull back all day long and then it's a loser, right? So I want to see that second confirming signal. I don't generally buy the pullback. I buy the break of the pullback is another way to look at it. All right, so I'm not seeing any more questions coming in. If you are watching this as a video and you want to ask me questions, just fire an email to me and I will answer it as best I can. When will you do the same great webinar to swing trading strategies only? So I'm going to do another video on, well, it's going to be on day trading, but I'll try to cover some swing trading topics as well. At the next presentation, I can't remember when it is. It's in the next week or two. So if you just try to attend as many of these webinars over the next couple of weeks, I'll try to touch on swing trading as well. Tonight, I really just wanted to walk through the day trading day, and hopefully that was valuable. CMRX was actually a good swing trade today. You can see on this chart, if I go back to here, see on this 13-minute chart here, the pink dots. So that's one of the things that I didn't talk about, but it's one of the things that Active Live does as well, is it will identify 13-minute swing action candles. And that's all these pink dots. And so in this case, we had a nice pink dot, which sets up for a strategy called a 13-minute simple swing. And those are all covered with that action, or sorry, with that Active Live service. It also tracks all of the entry signals for the swings. Do I monitor moving averages? A little bit. I use the 20 and the 40 period moving average to sometimes help me protect my profits if the market is really moving quickly. But generally, I don't use it for entries at all. It's moving averages, study after study has shown that they're really not great for entries. So I don't recommend them, but I do think they're useful to gauge trend and do it that way. What are my thoughts for tomorrow? Well, we can go do some analysis on that. Let's just make this a SPY chart here. So today was a pretty strong down day. I'm just going to zoom out on this a little bit. The upward trend line that I talked about that was broken this morning was this one. I'm trying to get it to draw here. I'll have to just do it the other way. So there's our trend line that was broken with the gap down this morning. There is actually a longer term trend line that has not been broken yet. So let me show you that. I'm going to make this a 30-minute chart so you can see this longer term trend. Actually, you know what? It may have been broken. Well, no, there's another one here. So we can go with this one here, this at 280. There's a long way to go until we get down to that level. So we've broken this upward trend line. We fell off into the close. I think tomorrow, good chance it opens up. Not certain, but good chance. And then I think it may rally a little bit, even if it doesn't open up, even if it opens down a little bit. I think it might rally to start the day, and then I think we roll over. But there is some pretty good support right here, so I don't see a huge amount of downside for tomorrow. Some downside. It's difficult to know until I see how the market opens. But given the upward trend is broken, we had 8 up days in a row, it's time for a little bit of profit taking. I don't think you're going to see dramatic selling because investors are still sitting, with anxiety, or with anticipation is a better word, about some kind of China-US trade deal. And I don't think people want to be short selling the market or selling their positions because there's this general thought that there's going to be some announcement on a positive US-China trade deal. I don't think it's going to be tomorrow. I think it could be a month from now. Who knows? Weeks from now. The market might get a little tired of waiting, which is why we are probably going to see a little pullback for a couple of days here. But I don't think you're going to see a real strong sell-off. My sense is when that deal is announced, assuming it is announced, you will get a pop, and then you will get some profit taking after that. And that's something I talked about in this weekend's Market Minutes video. We'll see how that progresses. It's hard to predict that kind of stuff because you really have to judge it based on what's happening as it happens. How do you pick what to enter from all qualifying stocks? Well, there's 2 approaches. One, if I'm really confident of where the market's going to go for the day, I will just buy everything that triggers, and I don't really even look at them. On a day like today, I wanted to be a little bit more selective because of some of the things I talked about earlier. So in that case, I just go through the charts as quick as possible and look for those good pattern breaks. Stocks, I don't like chasing stocks that make big gaps because they often will pull back first. And so, there's things that I go through, and those are some of the things that I'll go through in that live class, some of that finer detail about how do you evaluate that stock and how do you do it fast? Because we don't have a ton of time. How do you do it as fast as possible? And then also, how do you add to a position? When you've got a winner, like if you're in AMD today and it's winning, it's really working, there was a number of opportunities to add to that position to improve the profitability. So again, if I just may as well show you this. I'm assuming there's still a few people in here. Yeah, lots of people in here still who are interested in this. So AMD gave a number of signals to add to the trade with what we call flag breaks. So the original entry was there, and then there was a flag break there and another one there. So those were opportunities to double and triple the size of the position to take advantage of it moving. That's called scaling. And instead of this trade making 4 RR with scaling, it made, let me just quickly calculate, probably 9 RR, 8 or 9 RR in total. So it doubled the profitability of the trade by adding to a winner. I never add to losers, ever add to losers. But I will add to winners when the trade is working. All right, so I'm not seeing any other questions, so I think I'll wrap it up there. I hope this has been insightful, useful. If so, if you're watching it as a video, please click on the like button, subscribe to the channel. Sign up for some more of those events. We'll try to give you more good information in the weeks ahead here as I do lots of webinars. And for those of you in Calgary and Edmonton, hopefully we'll see some of you out there as well. Have a good night, everyone. If I missed your question, my apologies. You can always email that to me as well. Have a good night. See you next time.